Harris's plan really wants to tackle large-scale construction projects focusing on affordable units. And when you look at Trump's plan, his plan is basically about less regulation, fostering economic growth and job growth. His plan is that when those three factors line up, there will be a large recovery in the housing sector. And I think the biggest thing about it is there's going to be a fundamental change that happens on Tuesday. One thing I wanted to bring up today is, this is a little different slant on what's going on with real estate in the election. So a couple months ago prior to this, we did a real estate story about what's going to happen to housing prices depending upon which candidate wins, which candidate becomes president and I'm talking about the presidential race. And so, and really the gist of that show was that there's probably going to be slight differences, but in almost every case over the last 40 years, we saw a level of appreciation the next year coming up. So kind of the summary from that show was like, it's likely what happens after these elections is that we get some sort of reassurance of what we're dealing with. So leading up till Tuesday, we have all this uncertainty in the market. We have uncertainty with the interest rates. We have uncertainty with investors, with developers. And we're going to talk about that today on why that is. And then once it happens, it's like the whole market kind of takes a sigh of relief and says, now we know what we're dealing with. Let's go figure out how to deal with it.
Yes.
And so I think we're going to see that happen today. So one of the things I wanted to really look into is what are we from a real estate perspective voting on in this situation? Like what are the policies that each candidate has put out there? Because there's been, I see too many TikTok short clips of what's going on. And then when you investigate and get into that, you find out a little bit more about the policy. So probably the best summary I've seen of this as I was researching in the last couple of weeks is a guy by the name of John Stevens for WRE News did a great article kind of going over what we're dealing with. So I'm going to break down a little bit today on what we have coming. So if you look at it, I'm going to start with Kamala Harris's policies and what she's been proposing, what's come out as some of the initiatives that she's looking at doing. So, and then give you kind of my take on what I'm seeing there. So number one, and you've heard a lot about this, and that is the number one thing you've heard her say is she is proposing a massive construction initiative aimed at building 3 million houses nationwide to alleviate the shortages of homes. And that's aimed to kind of fix the supply-demand balance. Okay, so how she plans to do this is a tax incentives aimed at developers focused on building starter homes. And okay, why that sector? Well, that's often a sector that is overlooked in the construction because of lower profitability. And there's been a lot of talk about this. Like, why can't we find a starter home? How come, even locally in Tri-Cities, how come it's really hard to find a starter home under $400,000? Why isn't anybody building stuff like that? Well, when you look at the amount invested, say, for a builder, and you look at their profit margins, when it gets right down to it, in that starter price point, you have to build a smaller house. But the lots that we're trying to find to build these on, there's not a lot of variability in the lots. Like if you spend, so these builders are looking and they're going out and having to spend $75,000 or $80,000 for a lot. It's very difficult to find a lot under $75,000 when you go out and look. So then you look at the builder and the builder says, okay, no matter what, I'm sunk cost in this at $75K.
Yeah.
So now if I build a $330,000 house that I can sell for $400,000, I'm only going to be able to make my margin on that $330,000. Like that, That's all that I'm going to be able to do. And that's if they get full price for it when they sell it. So a lot of builders will look at that and say, okay, well, what happens? The lot's 75, whether we build a $400,000 house or if we build a $500,000 house. So, now if I'm working on let's say a 10% margin, and there's probably some builders that just spit out their drink and said, I wish, Lance, reality check, but there's different variabilities of margin. But let's just say it was 10%. They had to put out and buy that lot for 75. So on that 330, they're going to make 33,000. But if they put 430 into, now they're going to make 43,000 on a 10% margin. And so a lot of times they're looking and say, well, shoot, that price point is selling pretty well. Let's just go for that. It's the same amount of work for me to build that house. I'm going to go ahead and how do you bridge that gap? Well, when you look at bridging that gap, Harris's housing policy is saying, let's give tax incentives to developers and builders that are willing to build that. So some sort of iteration of the plan might be that if you build a house that is 400,000 or less, we're going to, and make up whatever you want to make. We're going to not charge you sales tax, or we're going to give you a $10,000 credit on your tax return, whatever comes out, so that you are not paying, you're not paying taxes on that differential. I mean, there's a million ways they can do it, but basically it's going to incentivize that builder with that extra 10K so they don't push the price up to the next price point. So that was number one. Number two is, she says, for first-time homebuyer credits, one of the cornerstones of her policy that they're talking about is basically a $25,000 subsidy for first-time homebuyers. So this is larger than Biden ever proposed, and they're targeting a younger demographic that needs down payment assistance and middle-class families struggling to save for that down payment. So this is to increase access to homeowners that traditionally could not. And I can tell you, from a boots on the ground perspective, we don't always see these first-time homebuyers having $25,000 to put down. And when they don't, they get beat out by somebody else, maybe an institutional investor, maybe somebody that is downsizing and has the money. So they're kind of leveling the playing field for the first-time homebuyer in this situation. Now, I know the question is, and we're going to get to Trump's policies. I know the question is, who's going to pay for this, right? And that comes up in these articles, and we're going to talk a little bit about that. In conjunction with that institutional investor, she has said numerous times and is claiming to want to target large corporate landlords. Everybody's heard, about the large corporate buyers that are buying with hedge fund money portfolios across states. Not as big of an impact that we have felt here in Tri-Cities, but I tell you what, when I talk to my realtor friends in like Raleigh, North Carolina, or some of these big appreciation markets, these Vegas markets, these Phoenix markets, even I've even seen them up in Minneapolis. There have been large institutional investors buying in those areas, and I tell you what, boots on the ground agents do say that when they're competing, it is very, very difficult to compete against those institutional buyers. What that looks like, I have not been able to find in my research any specifics. It has just been kind of a political talking point that there's going to be some crackdown on that to prevent manipulation of the market, because they're trying to prevent a rent-only society is going to be the take on it. And then number 5 is rental market reforms. That's the other thing that was talked about. Was there's been a lot of talk about different algorithms that rental companies have used to set rents in different areas. This does not sit well with some people in that situation. And so they're going to be looking into, I think basically what they're trying to prevent is sharing of information for the purposes of price fixing, right? Like, I mean, it's one thing to set rental rates because you think your property is more, desirable and valuable. What they don't want to have is you to set rates on something because your competitor is pricing something the same way. Okay, that's what they're trying to really get down and look into. And, it's crazy, but those things, we see those things happen in markets when these stories get broke and stuff. And that's the case. And it's, from somebody that runs a business, that runs a rental property business. I mean, I can't imagine, but I see the stories out there that does that. I mean, it's just, we are pricing based upon the market. So it'll be interesting to see what happens in those situations. But I will tell you, it is interesting because I've already had, just because of this, and I will tell you that on both sides of it, we live in an area where people are very, very aggressive and willing to, they find solutions. Mm-hmm. I've already had multiple builders call me and they're preparing for either candidate to win.
Yeah.
Meaning they're already saying, so will this work? Well, I tell you what, a portion of it on either side will work. Because I've had builders call me and say, hey, if first-time homebuyers are all of a sudden going to have $25,000 down payments and I'm getting a tax credit, Lance, the minute that this thing goes into deal, you betcha I'm firing up some new house plans. And we're going to be building house plans to do that. So regardless of which situation it goes, I'm confident in our local builder market, real estate market. We're already preparing for either direction that the housing market will go.
Yeah.
So the very, very different aspect of the two is that most of the talking points in what comes out of his campaign is deregulation and free market solutions. Mm-hmm. So they focus a lot on reducing zoning laws, allowing developers more freedom, mm-hmm. hoping to accelerate the construction of new homes and rental units without extensive subsidies or involvement by the government. So it couldn't be, very opposite from what we saw in the first segment. Mm-hmm. The other thing that they look at doing is they want to extend tax cuts for the developers and the home buyers. And then he believes that the private sector, when they're incentivized properly, will efficiently address the housing crisis. Now, there's a big argument that we still have the housing crisis because of some of that. And so when we look at it, the fundamentals of this are very, very different. And I did talk briefly about, in a free market society like that, what's that builder do when he's looking at, a certain level of lot price? Well, a lot of people would argue, well, just go buy cheaper lots. And well, the problem is we haven't had a lot of cheaper lots available by developers. Now, mm-hmm. some of that, it takes years. The problem with just looking at these in a vacuum or looking at these in a snippet of time is that when you look at large scale developments that go through permitting, lots, zoning,
it takes time.
Environmental, it takes time. So a lot of the result of what we see, we might not even see for 3 or 4 years after we're talking about these policies. It's also why you see a lot of developers and builders go bankrupt. Mm-hmm. Okay, because they put these plans in place when, interest rates are 2.5%, and they're like, oh my gosh, it would be great to do a development of 75 homes and I could sell them all. Mm-hmm. And then by the time they get those lots on schedule and done where they can actually sell them and start building on, like we just saw in the past couple of years, rates are back up to 7%. They can't pay the bills. They can't even pay the interest on the notes. And so then you see a builder and developer.
And 4 years later, inflation is at near or record highs. That doesn't help.
These things these are things that are hard to control in that situation. But you've got to look at the fundamental approach there. The other thing is, the opposite of going after some of the regulation for these large corporate hedge funds that are buying hundreds, thousands of houses. Trump's campaign has said multiple times they have a high level of opposition. They are historically opposed to any form of rent control or market intervention. And so I think you'll see these policies where they also don't really want the federal government getting involved in those decisions, and they're going to push a lot of those to the state level, including some of these zoning decisions that we've seen in Washington and Oregon the last couple of years as well. So, and like I said, when those laws change, we don't know. We're still dealing in Washington and Oregon. We're still dealing with implementation of laws that were passed 3 years ago. Those have a 3 to 4 year cycle. We won't necessarily see exactly what's being built in these neighborhoods when we talk about zoning, for instance, until all of these policies are put in place by the local government. So there's a lot going on in that situation, but Harris's plan really wants to tackle large-scale construction projects focusing on affordable units. And when you look at Trump's plan, his plan is basically about less regulation, fostering economic growth and job growth with low inflation. McKay, you were onto it. That's mentioned a number of times. His plan is that when those three factors line up, that there will be a large recovery in the housing sector, with the market making the decisions. So they're very, very different. And I think the biggest thing about it is there's going to be a fundamental change that happens on Tuesday.
Yeah.
And so we just have to look at it as real estate professionals, as building professionals. Either way this goes, the approach is going to be slightly different. And so our, job in the real estate industry and what we do as professionals is we look at where do the opportunities exist, and then how do we work within that system?
How are you going to adapt to whatever happens
as that gets developed? And this will likely shape and change the real estate industry over the course of the next 3 to 4 years, whether that's with developers that are putting in more lots because of tax incentives that are done, or that's with first-time home buyers that are getting additional subsidies and additional down payment programs. None of this is vastly new. Yeah, like we haven't seen, that amount might be new. I'm trying to think. I'm going back in the 20 some odd years I've been doing it. And that $25,000 amount for first-time homebuyers, that would probably be revolutionary as far as the amount that's done. That's new. Like that would be an amount that I have not seen, even with all down payment assistance programs and stuff like that. I don't think they've quite gotten to that level, but neither have housing prices. So some of it, forever we've had first-time homebuyer grants. We've had Washington State housing assistance programs. And we're really good at figuring out what those programs are. So regardless of what happens and what goes on, there's going to be two different lines that we're focusing on. And either way, I think the bottom line is we're still expecting home appreciation. We've had moderate appreciation. Research and history shows we're going to have some more. But could be either way. There could be some very, very exciting changes in real estate. And darn well, McKay, I'm going to be here talking about it and helping people navigate what that looks like.
Yes.
And so let's not freak out too much, because guess what, McKay, I'm still going to be here next week.
Yes.
Talking about real estate on this show. So
right here on News Talk 870.
Have a good one.
You too.